Assalamualaikum and hi everyone. This is our group members, which is Nushafina binti Salihuddin, Norazurin binti Muhammad Qadri, Siti Nordiana binti Muhammad Hairul Arif, and I am Putria Alina Salha binti Asman.
Assalamualaikum and hi. This presentation video will be started with organizational context, which is I will talk about executive summary for two selected company. The selected company is Padini Holdings Berhad and Parkson Holdings Berhad. I will start with Padini Holdings Berhad. Padini is the multi-billion textile and garment industry in Malaysia. Before Padini, the operation have been started as Wayo Garments Manufacturers Company, and now Padini have grown to become one of the country's prominent fashion companies. Padini has multi-brand, which is Padini Concept Store, with 8 brands: Padini, Seed, Padini Authentics, PDI, P&Co, Mickey Kids, Vinci, and Vinci Accessories. Padini also has single brand, which is Brands Outlet. Padini provides various types of attire, shoes, bags, and accessories that suitable for both male and female from all ages. There was Padini branch at Cambodia, Indonesia, Bahrain, Myanmar, Oman, Qatar, Thailand, and United Arab Emirates. In 2019, Padini has joined e-commerce site, which is padini.com. In 2020, Padini start live sales on social media such as Facebook. Padini also involved into Shopee and Lazada. The second company is Parkson Holdings Berhad. Parkson is a department store. Parkson has started as Amalgamated Containers SDN BHD and now become an Asian retail success story. The products that provided by Parkson is various branded products that related to fashion and clothing, accessories, cosmetic and fragrance, dietary supplement, footwear, home and living, sports, stationery, and the last one is travel and luggage. All this product is suitable for both male and female. Most of the product are suitable for kids and adults. Area that Parkson served is Malaysia, China, Vietnam, and Myanmar. Parkson also available for online service through their website and social media.
Hello and Assalamualaikum. My name is Norazurin binti Muhammad Qadri, and we proceed to the next part about Padini and Parkson financial performance. As you can see, this is financial ratio of Padini of the year 2019 and 2020. This is a financial ratio Parkson of the year 2019 and 2020. This is financial ratio Padini and Parkson for the year 2020 and 19. Lastly, financial ratio Padini and Parkson for the year 2020. Question 1. How liquid is your organization? Based on the result of current ratio and quick ratio, Padini is more liquid than Parkson. We can see that in both years, Padini current ratio is higher than Parkson, which is 3.92 times and 4.01 times compared to Parkson, 1.43 times in 2019 and 0.88 times in 2020. In quick ratio, we also can see that Padini had higher ratio in both years. In 2019 and 2020, Padini quick ratio is 2.58 times. However, Parkson only had 1.15 times in 2019 and 0.74 times in 2020. With these two ratios, we can know that Padini is more liquid since it indicates higher ratio that reflects to the ability to pay short-term obligation on time. Question 2. Are the managers generating an adequate operating profit on the organization asset? Based on the result of return on asset, operating profit margin, and fixed asset turnover, Padini managers are generating an adequate operating profit on the organization asset more efficiently. From the table, you can see in 2019, Padini had the higher ratio than Parkson. Padini return on asset is 0.17% and Parkson is negative 0.02%. In operating profit margin, Padini also had the higher ratio, which is 0.12% and Parkson 0.04%. Fixed asset turnover for Padini is 13.50 times and Parkson only had 0.88 times. From this table, in 2020, Padini also had the higher ratio than Parkson. Padini return on asset is 0.05% and Parkson is negative 0.06%. In operating profit margin, Padini also had the higher ratio, which is 0.10% and Parkson 0.05%. Fixed asset turnover for Padini is 13.17 times and Parkson only had 0.91 times. So, we can conclude that Padini managers are generating an adequate operating profit on the organization asset more efficiently. Question 3. How is your organization financing its asset? Based on the result of debt ratio, Parkson had a higher percentage than Padini that reflect to higher amount of debt. In 2019 and 2020, we can see that Parkson had the higher ratio than Padini, which is 0.61% in 2019 and 0.75% in 2020. Padini debt ratio in 2019 is 0.23% and Parkson is 0.45%. This indicates Parkson is more risky than Padini because higher amount of debt in the financial structure. Lastly, are the managers generating a good return on equity? Based on the result of return on equity, Padini managers are generating a good return on equity than Parkson. In 2019, Padini had the higher ratio than Parkson. Padini return on equity is 0.22% and Parkson is negative 0.05%. In 2020, Padini still had the higher ratio, 0.10% and Parkson, negative 0.24%. We can conclude that Padini managers are generating a good return on equity than Parkson based on the return on equity result.
Next, factor and risks that may affect current and future performance. First factor is good reputations. Company with strong favorable reputation attract better people. This may be observed in Parkson and Padini, who have a solid name and reputation in their industry. Parkson and Padini are believed to provide more value, allowing them to demand a higher price. Customer with return if they require anything in the future. Return customer may also serve as an excellent launchpad for loyalty-based marketing incentive. Customer that return on a regular basis help the company stay afloat. Second is good facility management. Parkson and Padini have excellent facility management. The need of computers used for system of record facility change with time, making a system of record critical in understanding and addressing this demand. One of the primary advantage of facility management system is the ability to track historical expenses, trend and change over time. Consider some of the hundred of data elements that a facilities manager must monitor, including space occupancy increases over time, employee locations or allocate workstations, asset expenses and life cycle, and utility expenditures. The third factor is patent. Parkson and Padini patent their product in order to safeguard the design of anything functional or useful. When purposeful infringement occurs, patent provide greater right. If the court determines that a rival knowingly infringed and that the infringement caused damage, the patent owner may seek damage against the competitors. Parkson and Padini get royalties from a patent they list, maybe in conjunction with a registered design product and trademarks. Last factor is market. Parkson and Padini operate in location with an increasing population tend to be valued higher than businesses that operate in place with static or failing populations. The entire market population size is important in the collection business. The largest population provide great opportunities for business to grow. Therefore, we can see that both of these businesses are usually located in shopping malls in city. Next, risk. First risk is technological change. Parkson and Padini's technology risks include unforeseen development in the company's manufacturing and service. Technological risks might include failing to invest in IT employees to maintain company system. Server and software issues that cause equipment downtime can raise the risk of production shortage and financial losses as a result of poor revenue and idle staff. Company must also invest money to purchase new technology that will be employed in the organizations. Second is loss of highly talented worker. Employees are directly involved in the business activities. Parkson and Padini are the primary emphasis for anybody attempting to join the world of employment, whether as a full-time or part-time employees. Rate of resignation is quite high. As a result, companies frequently lose extremely gifted personnel, such as promoters who are skilled at giving service and conversing with customers. The third risk is supply chain disruptions. Product supply chains interruptions have a negative impact on a company's financial performance because to supply interruptions, the company business activities will be affected. Company lose money and may need to locate alternative suppliers that can offer the goods effectively. Lastly is competitors. Competitors rising proportions of business market for a product or service might result in a competition risk. Other firms such as H&M, Brands Outlet and other make clothing that is more in step with the current trend and has a distinct design than Parkson and Padini. Customer will prefer to shop at other store than Parkson and Padini.
Projections for Padini Holdings Berhad in future performance. The first one is their profitability. Figure 1 shows Padini's profit was at 160.17 million in 2019 and dropped drastically to 75.17 million in 2020. This is due to the COVID-19 outbreak at the end of 2019. Padini's sales were dropped as a result of the movement control order MCO implementation and resulting in huge losses for Padini in 2020. Based on what I know about Padini's financial health and performance, even though they are still gaining profit in 2020, but it showed a decline in profits from the previous year. Thus, I forecast that Padini's profit may drop in the future performance. The second one is the liquidity ratio to pay off short-term debt. The liquidity ratio in 2019 was 3.92 and increased to 4.01 in 2020, which shows that they has healthy liquidity indicators. This is because the acid test for a healthy and financially strong organization should be more than 1. Therefore, I forecast and believe for Padini's future performance, it will be able to convert assets to cash in order to pay its current liabilities. Figure 2 shows that Parkson had a loss profit in 2019 at negative 436.4 million to 501.8 million in 2020. The general ban of mass movement and the execution of numerous health measures to combat COVID-19 had an impact on the market in Parkson outlets, resulting in negative sales growth across all retailing areas. Based on what I know about Parkson's financial health and performance, referring to the declining profit statement from 2015 to 2020, I forecast that Parkson's profit may drop in the future performance. Next is the current ratio. The current ratio was 1.32 in 2019 and dropped to 0.89 in 2020, which shows their current liabilities exceed the current assets. A low current ratio in 2020 shows that the probability for the company to repay the creditors is very low. Thus, I forecast that Parkson's current ratio in the future performance may have difficulty fulfilling its short-term obligations. Recommendations for Padini Holdings Berhad and Parkson Holdings Berhad in upcoming. The first one is focus more on digital platforms. The existence of pandemic COVID-19 has resulted in a lack of shoppers coming to all stores, including Padini and Parkson. The impact of pandemic COVID-19 has transformed this business platform into a new era. Padini and Parkson may grow more in digital platforms by introducing the product features via Facebook Livecast and Instagram, because they are some of the important channels. Thus, Padini and Parkson must use technology to build strategic planning in order to enhance profits as a result of these changes. The next one is the latest fashion trends need to be made available in store. I suggest that Padini and Parkson design clothing that is both comfortable and appropriate for wearing at home and out. The latest fashion trends must be provided at the store as soon as possible at an affordable price before it loses its appeal. The industry is always changing, but future adjustments will result in a more sustainable, customer-centric, and efficient industry.